What's going on, guys? So in this video, we're going to talk about the difference between term life and whole life. Now, there are a lot of people out there who's asking which one is the better product. Is it term or is it whole? So I'm going to make it very, very simple for you guys. Guys, write this down. A term life policy is simply short for terminate, which means at some point in time, that price is either going to increase or is going to cancel out. Now, a lot of people are looking at that term like, okay, is that really the best thing for me? Write this down, guys. If you are a male or a female who are young, who has a mortgage, who's looking to protect their family, may have some children, right? Who's in grade school, middle school, or high school, and you are the breadwinner of your family, I will highly suggest getting a term life insurance simply because you can get a lot more death benefit for a very, 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 very low cost. So if you have a mortgage on your home, if you are married and you are the breadwinner of your family, I will highly suggest getting a term life policy because you can get a lot more of insurance for a cheaper price. Now, guys, when it comes to the term life insurance, it also allows for you to have access to some living benefits as well. Sometimes, depending on the carrier, you can get access to critical illness and chronic illness, which simply means that if you were to have a heart attack, a stroke, or get diagnosed with cancer, you're not able to work, you're actually able to use these benefits in your plan to pull some money from your death benefit to pay out to you in case you're not able to work and perform 2 out of 6 daily living activities that prohibits you from working, okay? Now, with the term life policy, you also do have a rider that you can connect to it, something called a term life return on premium. Now, guys, this is very, very important. Most term life policies start and go for 5 years, 10 years, 15, 20, 25, or even 30 years, which will cover you for the duration of that period of time. So what does that mean? That means if you were to get locked into a 30-year term, you are only covered for 30 years. So me being 27, if I were to get a term life policy on myself currently right now, at the age of 57, that term will expire. Now I have 2 choices. The very first choice I have, if I had a term life return on premium, I'll be able to get all of my money back at the end of the term, or it'll end up canceling out. Okay? I can get all my money back that I paid into the policy, or it'll end up canceling out. The second option, if you don't want to have a term life return on premium, you can also get a regular traditional term that will cover you for that 30 years, and you will not get any of that money back. Okay? You won't get any of that money back at all. Now, is that a great plan for you? You have to ask yourself if that's a good plan. So when you're explaining it to your clients, guys, you want to make sure you explain these benefits to them so they can properly understand what they will need it for. Now, most people use term life insurance to cover their mortgage, for mortgage protection, or to just leave a larger death benefit behind to their family in case they were to pass away. Okay? Now let's talk about the second option. We have a whole life insurance plan. Now, for these type of clients, these type of policies, I highly recommend the final expense whole life policies for people who are looking to cover their burial or their cremation, they're retired, or if they're just looking for something that's permanent that can cover them for the rest of their life. Now, these prices on these plans are a little bit more expensive, but you have to think about that these prices never change on the client, okay? Opposed to the term life, at the end of the term, if they decided to renew their plan, it will cause the price to go up on them drastically. So the same price that they paid 30 years ago will not be the same price that they pay 30 years later, okay? So the beautiful thing about the whole life is that it does cover them for their entire life. It does build some cash value for them as well. And they'll be able to use that cash value in their policy that they can borrow from if they ever fell short on hard times and needed to access cash quickly. Okay? So again, the whole life plan is a permanent life policy that protects the client the whole life. The premiums never change, the benefits never change. It does build some cash value. It does come with a terminal illness rider, which simply means that if your client had a 2-year life expectancy, they can pull 75% of that death benefit out early from their policy to pay for any of their final arrangements early, okay? Now, in most case scenarios, the reason why a client would want a whole life policy is because they are looking to cover their final expenses, either their burial or their cremation, or if they're just looking to add on to their current policy to make sure that their loved ones are not left with any financial burdens or debts. So, which one do you like best? Do you like the term, which expires after a certain period of time, but you can get a larger death benefit for a lower face amount? Or do you like the whole life policy that covers you for the rest of your life, where the premiums will never change, the benefits will never change? It does have some equity in your policy that you can be able to access over the years. The downfall is that it does start a little bit more expensive, but the client is covered for the rest of their life. Now, again, one size does not fit all. That's why we have the term and we have the whole life plans to simply be able to offer to our clients, but it all depends on their health qualifications, but most importantly, their budget as well. So when you're explaining these things to your clients, you have to know as an agent which product is going to best serve your client. Hopefully this helps.